I wanted to share a video on Chapter 3, homework problem number 1, the problem with Tawana and Jonathan. So we have a scenario where we have a mother who's giving money to her son for his college expense. To work through this problem, we need to understand the after-tax amount, her marginal rate, and his marginal rate, okay? Because we have to understand there's a tax impact to anything we do, okay? The first thing we want to do is we want to understand what's the pre-tax income for both Tawana and Jonathan as it relates to this $13,000. Now, pre-tax income is a formula. It's after-tax income divided by 1 minus the marginal rate, okay? What we're basically backing into with this formula, and for Tawana, the result is going to be $20,635. So let's pause and realize what that is. Tawana has to earn $20,635. And then if she's taxed at 37%, her after-tax amount will be $13,000. Okay, she has to earn this much given this rate to end up with this much in after-tax income. Okay? If you need to, pause the video and do the math sort of longhand. Do 20,635 times a rate of 37% equals 7,634. And then 20,000, we take the same number, 20,635 minus 7,634, and you get 13,000. Okay, so do that math if you need to. Step through this math to understand the concept of pre-tax income and after-tax income. Pre-tax income times the tax rate gives you the actual tax. We take the tax, we subtract it from the pre-tax income, we get the after-tax income, which is the amount up above. Okay? Pause and run through this math if you need to. Okay, so we have the pre-tax income for Tawana. We're going to do the same thing for Jonathan, except now we're going to use his marginal rate. And we're going to see that his pre-tax income is $15,294. Okay. This means that in order for her to get, if he becomes her employee, in order for her to get him the $13,000, she has to actually give him a paycheck of $15,294. The reason is she wants to account for the tax that's eventually going to be taken out. So now let's go to the next step. We're going to have Jonathan receiving a paycheck from his employer, who happens to be his mother, for $15,294. A 15% tax rate is going to be applied, because that's his marginal rate, and he'll end up being with a tax bill of $2,295. So that's a new cost that the family is going to have to absorb as part of this scenario. Jonathan's tax liability will go up here. His income's gone up, but his liability will go up too. So now let's look at Tawana's side of the equation, because we want to see, in the end, is there any net savings to the entire family? And there is, and here's why. Tawana is going to use this $15,294 as a deduction on her tax return. And she can do this because as a sole proprietor, she's allowed to include in her income, in her Form 1040 or her tax return for the year, she includes any salary she earns, including business income. So she can have her own business, and maybe her own business is her only form of income. The point is, the fact that she's a sole proprietor, there's something called a Schedule C, which is a tax form, and we'll look at this more as the course goes forward. And it lists revenues and expenses. And what a business owner would do is they would list out their revenues, they would deduct their expenses, and then the business income is what is included. The net business income, the profit or the loss, is included in the 1040, the taxpayer's tax return. So this is an expense, which means it is a deduction for Tawana. Now, what we want to do is we want to take the full amount of the expense and we want to apply Tawana's rate on this to get to a net deduction, so an after-tax deduction, or I should say a post-tax rate deduction of $5,659. Okay, so this is going to be her savings. Now, she's saving $5,659. He's absorbing a new expense of $2,295. If we net them together, meaning if we add them up, we see that for the family unit, they're going to save $3,365. So take your time, see if you can work through the logic. Happy to take any questions over email, and if anything about this is unclear, just let me know, okay? And if we need to, as a class, we'll go back over this on Monday. Thank you so much. Have a great weekend.